Hey everybody, this is Tom Nash, and we got to talk about what happened with Tesla. Now, Tesla dropped delivery numbers yesterday, and they were not great. And when I say not great, it was a trucker driver size deuce. 387,000 deliveries, well below expectations. There's no way to sugarcoat this third. It was not a great quarter. There's plenty of excuses, obviously, which is the Red Sea issues, the Model 3 Highland retooling, the China issues, the Berlin fire, the dog ate my car, whatever, right? It doesn't matter. At the end of the day, disappointing numbers. However, if you put it into context, it makes more sense. Now, I'm not here to say that this was a great quarter. It wasn't. But you got to look at the rest of the industry. At the same quarter, BYD, the Tesla killer, or at least supposed Tesla killer, they dropped deliveries by 43%, GM by 20%. So nobody's licking honey in this quarter. So let's be honest. In fact, Tesla just bypassed BYD as the world's best-selling EV producer with 387,000, while BYD only sold 300,000. So that could have been a headline for CNBC. Tesla takes first place on global EV deliveries. Of course, they're not going to do that. And I don't think they should, because this was not a great quarter by Tesla. What I do find disappointing here, and I'm going to surprise you, is that despite the fact that 387,000 deliveries was a third as far as delivery numbers, despite this horrendous mainstream media noise and FUD, despite all this negative sentiment, I'm still very much disappointed that the stock only dropped 5%. Now, I was hoping for more, I'm not going to lie, but I guess the Tesla community is just too smart for this shit. They know, they've been there before, they've seen it happen. They're not going to let it drop more than 5% because they know it's dirt cheap at 160 to 180. And I think just another proof that the Tesla retail community is actually a lot smarter than people give it credit. They've been one step ahead of the institutional crowd for many, many years. It seems like 2024 is no different because we have guys like Gene Munster and Dan Ives going on national TV, going on CNBC and talking about how bad this quarter was and how horrible this can be, etc., etc. I want to play you a few clips from the Dan Ives interview and from the Gene Munster interview. And no knock on them because they do say in those clips that Tesla will be fine long term. But the way they talk about this event is absolutely mind-boggling. Check it out.
Let's call it as it is. While we were anticipating a bad quarter, this was an unmitigated disaster. First quarter deliveries was a nightmare quarter for Tesla, you wrote. Elon is now pressured by the street, and China demand remains very soft. And you also say, in this case, street criticism is warranted. But then I end, and you still have an outperform rating, and I wonder why.
Hey, look, I mean, for the long term, like in terms of the actual opportunity for EV, for full self-driving, for autonomous, that's still there. But let's just call it like it is. This is no smoke and mirror. I mean, if you looked up train wreck in the dictionary, you'd see a picture of Tesla's 1Q quarter. And now in terms of the growth, the opportunity, $30 billion in cash, they're in a phenomenal position from that perspective. But I'd say probably this is what I'd say in the last 5 years, probably the darkest period relative to what we're seeing in China. And this quarter, explanation mark. It's full self-driving, autonomous. You could argue that could be $1 trillion worth of value from a software perspective.
I was just stunned today. I think that this caught me off guard. I was expecting it basically to be flat. Deliveries is down 9%. Just to frame that in, that's a $2.5 trillion market. What's the auto market on a yearly basis? Eventually, of course, it's going to go EV. Panel appropriately talked about what's the timing of that. I think it's going to come faster than most people think, even though this is such an ugly day on the delivery numbers. And the reason is that I believe one of the biggest factors in this horrible number was that there was so much excitement around EVs. People who typically buy a car every 5 years probably moved it forward and bought it 3 years, pulled a lot of demand in. I think eventually that just starts. I'm guilty of being too optimistic, but I think eventually they get to the other side. And one final thought, Dan, you talked about FSD. I agree that that is an important piece here. If anybody's tried FSD, the beta that they just put out last week, it is a step function better than what they've ever done. And so I think that is going to come probably in the next year or two. And I believe that that's going to be another catalyst. So that's where I'm at. So you've got two camps. You've got the people who believe. And the reason why the stock's not down more today is because that camp still exists. The reason why this still has the market cap it does is because that camp still exists. They're not going to be influenced probably by another couple punky quarters. That won't influence it. The people who are skeptical, there's nothing that Tesla's going to say over the next, when they report their quarter on the 23rd, that's going to get those people more optimistic.
Now, Dan Ives is talking about an unmitigated disaster, a horrible quarter, and the fact is he's still staying with his $300 price tag. He's saying that this is essentially a speed bump and that FSD alone can be a $1 trillion market cap. Now, Dan Ives is a real dude. It's a bad quarter. He admits it, which there's no reason to sugarcoat. They have a good future ahead, which I agree 100%. And he's asking for more guidance and transparency as far as the future strategy of the company, which is fair to me. You may agree, you may disagree, but him asking for more clarity on the strategy sounds fine to me. No issues with what Dan Ives said. And you have to understand that he's on TV. So he have to come out with a little bit more flashy kind of titles and headlines. But at the end of the day, look at the bottom line. The bottom line is $300 per share, 100% upside, FSD to $1 trillion. Now, Gene Munster, on the other hand, is a little bit of a different cat. Now, he's saying, look, this caught me off guard. I'm stunned. They'll have more pain in 2024, which actually all may be true. But here's what he's also saying. He's saying, look, at the end of the day, this is a $2.5 trillion auto market. And we have not even scratched the surface of EV penetration. And Tesla will be the leader. I mean, who else? VW? Toyota? I mean, who? GM, Ford, BYD, who just dropped 43% quarter over quarter. I mean, look, at the end of the day, he's 100% right. FSD is super close. It's going to be a monopolistic power for Tesla. And the bulls understand that. No bad quarter, no bad quarters will change what they think about Tesla's future, given FSD's potential. And the bears will still hate Tesla, even if Elon comes out with rainbows sparkling out of his freaking ears. He's 100% right. Now look, listening to these guys, it sounds like the roof is on fire, but they both say, and I'll give them credit, that things will be fine long term, that there's no real issues as far as the Tesla long-term growth story. Dan Ives a little bit more concerned. Gene Munster seems to be more relaxed. But all in all, both of them agree that this is a bump in the road and that Tesla will be fine as long as they fix a few issues. Now, that being said, I look at Tesla right now and I'm saying, look, these guys are leading in the FSD. They're leading in energy. They're leading in robotics. It's a long-term play that has so much upside in software. And they got the Model 2 coming out, whatever it's going to be called, the $25,000 car. And they got the Cybertruck ramping up. They're literally a leading software AI robotics company with unrivaled world-leading manufacturing capacities and manufacturing locations around the world and $30 billion of cash and no debt. And look, while I get it, the Tesla bears and the Tesla haters, they're having a great time right now. They're making shish kebabs of this quarter. And, why not? Let them have their fun. But at the end of the video, ask yourself this question. If this was a demand problem, if Tesla has a demand problem, Tesla would have known about it a few months ago. They wouldn't have just caught themselves, oh my God, we can't move any cars. They know in real time exactly what's going on. So why would Tesla produce 433,000 vehicles and only ship 387? Why? Why would they do such a horrible discrepancy between the production and the deliveries? Unless it's more of a logistical problem and a temporary bump in the road. Just food for thought here. Now look, here's the thing. Once FSD is actually operational, we're talking about a recurring revenue model with 80% gross margin and monopolistic power. It's game over for everybody else. I don't know why we're even having this conversation. When FSD launches, and now with FSD supervised, we're actually a lot closer than even I thought. Not even talking about the robotaxis, not even talking about the fact that every OEM out there will have to license FSD from Tesla. These guys, even if they just sell it in their cars, it's going to be an insane revenue generator. Probably more along the sides of a monthly fee, a monthly subscription, not as a lump sum payment, but nevertheless, something that no auto manufacturer have been able to achieve so far. And you know what I find most amusing? Despite the fact that Tesla is sitting on a mountain of cash, $30 billion, no debt, despite the fact that they have 7 different S-curves right now in the works, despite them being the best margins in the business, despite running the fastest and being the biggest gap in FSD out of everybody, despite all of that, record-breaking quarter in energy, people still talk about the Elon Musk post being too political and how that is killing demand for Tesla vehicles. Now, look, I'm going to be honest with you. I've never purchased a vehicle based on the political affiliation of the CEO of the company. I don't think nobody is buying a Tesla or not buying a Tesla because something that Elon Musk says or does or posts on X. I mean, if anybody does that, They're one unique snowflake. Now, what I'm saying here is very simple. I'll go with you here, one step forward. Let's say that Elon is killing the Tesla demand by posting about politics. Fine. What I find peculiar here in this whole story is how in the world Elon posting about US politics on X managed to drop BYD deliveries by 43% in a single quarter. I mean, BYD is so pissed at Elon right now for causing them to lose 43% of their sales because of his political tweets. It's absolutely insane. So Elon is not only impacting Tesla, he's actually killing BYD as well. So absolutely crazy. Now, I'm obviously joking, but you get exactly my point. Now look, at $160 to $180 per share, let's talk about it. Tesla is way more exciting than it's ever been. You know, we're trading at 35 times earnings, 5.5 times sales. It's trading absolutely sweet. They did have the worst performing year-to-date performance out of the entire Max 7, I believe. They've lost 60% of their stock price in the past 3 years, but the business is doing well. Always separate the business from the stock price. In fact, separate it in a way where you can say, well, look, I wish I could find a stock with a great business, but a horrible stock performance. There you go. So this company increased net income by 1,600% for the past 3 years. Now we're talking about a company that still has a truck that's just starting to ramp up, the best category in the auto industry in the United States. FSD is probably a year and a half away. That's going to be a monopoly. The Model 2 or whatever it's going to be called, the $25,000 car is going to be absolutely insane. Model Y is already one of the best selling cars in the world. And they have a great brand. Great product line, great brand. And on top of it, Tesla is actually spending the most out of the entire auto industry on research and development and capital expenditures. They're building more factories, they're buying more machines, they're researching more than anybody else, so they're actually increasing the gap from the entire industry. Now, look, with $30 billion of cash, a free cash flow out of this world, and no debt, nobody's catching Tesla. They have plenty of cash to do whatever they want. At the end of the day, this is a company that has a business that's going up, a stock price that's going down. It's the perfect opportunity for me to increase my position. If you buy all the time and you buy more when the stock is weak and you buy a little bit less when the stock is strong, eventually your cost basis will be very, very low. And while what I'm saying here is important, I think the thing that made Tesla what it is today is the community, the strength of the community. Now, we're building a community of like-minded individuals who like to talk about Tesla, who like to talk about Palantir, who like to talk about other stocks that are not very popular with the institutional investors. We're building an alternative, a retail community that gives the institutionals a run for the money. Join us. It is free to join. Discord.gg/DomNash. We would love to have you on there. Almost at 10,000 members. It's absolutely free to join. Now, if you want to join the academy, if you want to learn how to do this better, how to identify companies, how to research, how to monitor your portfolio, how to manage your portfolio, how to read financials, do your DCF models, all these things. Join the academy, and you actually can get better at this without me telling you which stocks to buy and sell. How about that? Patreon.com/TomNash. And if you made it all the way to this point in the video, get this code, TOM25, 25% off Stock MVP for a lifetime. And this code gives you a guarantee that your price never goes up. You can get it right now. Try it out for a week for free before we charge you a single dollar. You have a whole week to try it out. And if you choose to stay with us after that 1 week of trial, what you get is a tool that works way better than everybody else and is at a fraction of the cost of professional tools. We'll give you exactly what you need because we know we are retail investors and we built this for you, our fellow retail investors. We would love to have you on. Thank you so much. We'll see you in the next one.